If you've been bit by the bug of passive income or this FIRE movement, financial independence, retire early, you are bound to be thinking about real estate investing. I want to dig into some of the specifics of why people focus so much on real estate investing when they're trying to build passive income and when they're trying to build net worth. I'm Sam, and thanks for coming by the Living in Tampa channel. Mostly on this channel, we make videos about what it's like to live and move to the Tampa area, but today we're gonna start talking a little bit more about investing in the Tampa area. If any of those things are things you want to connect about, please don't hesitate to reach out. Our phone number and email are right there on the screen. Okay, let's just start with a basic definition of real estate investing. Real estate investing, just like investing in a stock, is owning real estate with the intention of making money on it in the short term or long term. Typically the way that's done is with like a rental house and you have a tenant in there paying you rent. And the primary draws to this are three different things: cash flow, wealth building, and tax benefits. And we're gonna get into all of those. And also just a quick disclaimer, this is not a video about how to get rich quick in real estate. Real estate is more of a get rich slow kind of game. And even when I say rich, what I mean in real estate is high net worth. And we'll dig into that wealth and net worth part later in the video. Let's start by talking about cash flow. Cash flow is the one that's gonna change your life right now. The one that's going to affect your monthly income is cash flow. And that's really important if maybe you're wanting to step away from a career or maybe you're just wanting to build something new. Cash flow is a really important part of that. And let's talk about how cash flow is basically calculated. Cash flow is the difference between monthly rental income and then all other monthly expenses. So what would those other monthly expenses be? You know, if you have a mortgage on the property, you'd be paying your mortgage, you'd be paying your taxes, you'd be paying insurance. Maybe you'd be paying some kind of property management company to take care of it for you if you're not managing it yourself. But then on top of that, as the owner of a property, you would want to be saving for what are called capital expenditures. So things like your roof, your air conditioning, your hot water heater, all of those kind of things. Those things can wipe out your cash flow on a property pretty easily. Let's just say you have a great property cash flowing $500 a month. So that's $6,000 in a year. I actually just put a new roof on a property not too long ago and it was $9,000. So that would have wiped out more than that year of cash flow pretty easily. And just that risk alone keeps a lot of people out of real estate investing. It's actually not a very crowded space. Just because people are into it and people talk about it a lot doesn't mean that a lot of people are actually taking action. The next main thing that attracts people to real estate investing is wealth. So what do I mean by wealth? When people talk about wealth, some people would use the word net worth. These things are pretty interchangeable, but specifically with a single property. Your wealth is your equity in the property. And we've got to break that down a little bit more. Let's describe what the equity is. Your equity is the difference between what you owe on the property and what you could sell it for, minus all the fees related to selling it, which is probably about 10% of the sales price. If you're calculating real estate commissions, title fees, all of these kind of things. Equity is built up every single month when your tenant pays you the monthly rent, you make the mortgage payment, and the principal of that loan goes down a little bit. Also, in the long run, property in the US goes up in value. This is also equity buildup for you. Maybe you look at the economy right now and think this is a bubble, or you think all of that increased value is just inflation. The reality is that land is finite, and demand to live in the US is a lot higher than that supply of land and housing. And sure, there are plenty of people all over the world that don't want to live in the US. Probably people in the US that wish they lived somewhere else. But in my time traveling in a previous job, I went to 30 different countries, and everywhere people want the opportunity to live in the US, to start something on their own, to have the freedoms to say whatever they want about their government, to vote, all those kind of things. People are drawn to the US, and that's not really slowing down. Actually, in one of those countries, I was in Jordan. I was just outside of Petra, a very touristy spot in Jordan, and we had gone to see it and had walked back, and in the same 5 minutes, I had somebody telling me how much they wish they could move to America, and then someone telling me death to America. So you experience everything when you're in other places, but that demand to be here is really, really high. So we talked about turning wealth into cash by selling a property, but wealth and net worth are typically not held in cash. They're typically in some kind of investment like real estate or in the market or in other kind of assets like that. There are ways to use that kind of equity and wealth without turning them into cash, and maybe we'll do another video about that sometime, about how to leverage your equity in other assets to buy new assets. Okay, the last big attractor to real estate investing is tax benefits. And I'm gonna touch on this a little bit, but I'm not a tax professional at all. I hire a CPA to do all of my stuff, so I advise you to do the same. The biggest tax benefit in real estate investing is called depreciation. When you own an investment property, it depreciates on a certain schedule. The value of the property is divided across those 27.5 years, and that depreciation can be taken as a tax write-off every single year. That just means a reduction in your taxable income from that property or from the business that holds the property. I do recommend holding properties in an LLC, not on your personal taxes. With renters, that can get kind of messy. But this depreciation, this reduction of your taxable income is extremely valuable. Let's say you have another job where you make a lot of money and you're looking for these kind of tax write-offs all the time. This is a big way to have a big tax write-off, especially if you own a property where you can do a cost segregation study where somebody actually goes in and looks at each element of the property and depreciates it based on the current conditions. So they'd look at the windows, the air conditionings, all those kind of things, and depreciate everything based on the current expected life of it. We're gonna make a lot more videos about real estate investing, mostly because we're accelerating that part of our business. We're doing that mostly through direct mail. We'll be wholesaling deals to other investors that want to invest in the Tampa area. If you want to sign up for that investor group, there's a link down below. We just want to get a little bit of information about what your goals are as an investor, and would love to hop on a call sometime. Also, if you have specific questions about real estate investing, please comment down below. We would love to address those in our next videos and make sure we're answering all the questions that you have. Thanks for coming by.